Hey, folks, welcome to another edition of Money Across America. My name is Garry Thurman, and I will be your host. And every single week, I'm so blown away and honored that I get to sit down with some of the top financial minds, the top financial planners all over this beautiful country of ours. And my guest today has actually been a mentor for me for a couple of years now. I met this gentleman a few years back. We've had a lot of deep conversations, actually about life. We've had conversations about what we're doing for our clients, how we're running our business, how to be a business owner. And this man has helped me out tremendously. So I'm deeply honored to have my friend on the show today, Stewart Willis from Phoenix, Arizona. Stewart, what's going on, buddy?
Man, I am living the dream, man. It's just a beautiful 105 degrees today here in Arizona. I'm a little bit bitter at the heat, but other than that, I am ready to rock here. I'm excited for what's to come this year.
I love it. And I have to tell everybody, my friend Stewart here just got back from Greece. So time difference and everything else he's got going on. And he says, Garry, I'm not missing this interview today. So I appreciate you sacrificing for us.
Yeah, and it was the worst day of flying I've ever had in my life. Multiple cancellations. So I went from Mykonos to Athens, Athens to London, London to Chicago, Chicago to Phoenix, and cancellation after cancellation, and it
Wow.
was terrible. But no, I wouldn't miss this, for anything. Listen, I appreciate the kind words at the opening, but let me just be very clear. I am as much a student as I am a teacher, and iron sharpens iron, and
Yeah.
I think you're only as good as the people you surround yourself with. And I think mediocrity is contagious, and that's why I hang around people like you, people that take financial planning, investments very seriously, but also people
Right.
that I can rely on for other personal matters too. So,
Yeah.
love you like a brother, and totally respect you as a financial professional. So, super happy to be here.
I love that too. So let's jump in. And I always like starting with this question. Now, first of all, you are all over Arizona, Vegas, Oregon, Nevada, Portland. You're in Vancouver, Washington. You got some new offices coming soon.
Mhm.
And I love that. But I think we're probably seeing, it doesn't matter if you're in Phoenix or in Chattanooga, Tennessee. I think we're all seeing some trends that are going on in our areas or with our current market or with the current clients that we're seeing. And what are those trends for you? What are you hearing from your clients right now?
Well, you know what's interesting is that you and I have obviously a presence on a broadcast television, which is a big voice, and people get to hear us talking about the way we feel. And you and I have consulted, quite a bit on how we should, what kind of content we should have for these shows. But also, we've done the national show, the Wealth Council, together off Fox Business, and had a great time doing that. But it's interesting. I would say this, when you ask the question, what kind of trends am I seeing? Well, you know, a lot of people will say, "Hey, you're just saying what other people are saying," and what I recognize is that we're saying it first. When I say we, I mean you and I.
Yeah.
But what do they say? The sincerest form of flattery is imitation, right? Imitation
Yeah.
is the sincerest form of flattery, and that's what we're seeing is that we're listening. We've got our fingers on the pulse of the markets, of the economy, of people's thoughts. All right, we've gone through some crazy volatility here with the
Yeah.
tariff conversation, and while the tariff conversation dominated the thoughts of a lot of people, when that was a big issue, it no longer is. So but what I'm seeing is, you and I have always had a conversation about, it's not about what you make, it's about what you keep at the end of the day, and how important tax planning is to the conversation. And I would say this, we're starting to hear people imitate that conversation almost verbatim,
Yeah.
which is just so hilarious to me. They're doing it obviously on smaller platforms, on, Google ads or whatever.
Right.
Like, that is exactly what Garry and I have been talking about for the last 2 years, and now they're
Yeah.
using it on their ads. We kind of take that Elon Musk approach where, hey, we're not going to patent or trademark anything. We're going to let the free ideas flow. And hey, you know what? If another advisor can try to, take our concepts and apply it, more power to them. Hopefully it
Yeah,
helps
I love it.
people.
I love it. So something we're seeing here, and you just brought up the word taxes. I actually hosted a dinner last night, Stu. And I always love asking the question, folks, do you think our taxes are high right now? And of course, the majority of people still thinks our taxes are high right now. You and I know that we're in the third lowest tax bracket we've ever been in. And with the new administration coming in, we feel that taxes are most likely going to stay low for the next few years. So
Well, if they don't mess it up, I don't know. I don't know. It's interesting
That's true. We
because
don't know.
this big, beautiful plan, I mean, depending on when, as we record today, this big, beautiful, tax bill, as we record today, hasn't been passed yet.
That's right.
They want it to come up for a vote. 4th of July is kind of the thought of when they're gonna vote for it. So it's any day, any second now, they're gonna be voting for it. But you know what? I look back when the Democrats had power, and they were trying to push Build Back Better. I don't know if you remember that or not. There's that saying, pigs get fed and hogs get slaughtered. So
Yeah.
people start asking for too much crazy stuff, and then it all blows apart. So hopefully Republicans don't mess up their opportunity to extend tax cuts, to take advantage of one of the most efficient tax windows in American history for the middle class. And that's who I'm mainly concerned with is those people in that 24% bracket and below. But who knows? Hopefully they'll get it past the finish line. It's any day now.
If they do or they don't get it passed, we're still currently in a very low tax bracket as we speak today. So is a hot topic for you and your other advisors Roth conversions right now? Because it is here in Tennessee.
Yeah, no question. Listen, we know what tax rates are today. We know what, the future of taxation looks like to some people, right? And you have to remember, I think a lot of people vote emotionally. They don't really think through the impact of how that vote is going to affect them.
Yeah.
Because listen, right now we have this sort of cult of personalities in finance where people just don't like Trump, right? Personally, listen, I don't want the guy dating my daughter, no question about that. But at the end of the day, policy wise, when it comes to pure fiscal policy, I think he's right on the mark. I think he's about, stimulating business, about, letting people realize how inefficient government really is. Listen, these people, these politicians who have never run a company, they've never run a profit and loss sheet, are coming out multimillionaires out of Congress. Listen, it's hard for them to give up money, right? It's kind of like, I knew as soon as I heard about this Doge program that, oh my gosh, Elon is going to get destroyed. Whether he was the hero of the left and now all of a sudden he's the devil. He's accessing data. Come on, man. It's like, man, so in that process or that position of looking for government efficiency, kudos to them for thinking that through. But I'm trying to, people ask me all the time, hey, Stewart, why don't you run for office? Why don't you run for Congress or for a Senate? Are you kidding me? First of all, there's probably pictures out there, with that I don't want to talk about that. There's no chance. And there's also no chance because, you know what, at the end of the day, let me just tell you this. I don't want to go through that with my family.
No.
So what it does is it puts you into a weird position, right?
Yeah.
When it comes to, how do we navigate this as an advisor, the current environment? And here's what I'll say, I'll circle back, is we are in a super efficient window of taxation this year. We know that for sure. Despite what happens in the future with this future tax bill, this is important to take advantage of one of the most efficient windows in American history right now.
Oh, man. Yeah.
When it comes to Roth conversions, pay taxes when they're on sale, and they are on sale now. But here's the thing. Don't do it willy-nilly. You need to have a plan. You need to make sure it makes sense from a tax perspective. And that's why I think it's important to have a financial advisor that understands true tax planning.
That's right. A fiduciary advisor at that. I mean, we're running into that all the time. And so when in talking about this, inflation, taxes, the cost of goods, all these things that are going on in our country right now, Stu, let's talk about income planning. You and I both know that income is the most vital topic there is out there for retirees and pre-retirees. People don't want to run out of money. Longevity risk is a real thing.
It is.
So income planning has to be vital for you and your advisors in all of your locations. So how are you guys working your income planning, and how are you building in the future cost of inflation or consumer goods into that income planning?
Well, here's what I would say. I think it's very important for people to have a source of income that doesn't fluctuate with the markets. Okay, so that when we see things happen like we saw this year with the tariffs, we saw incredible volatility. Everybody knows you're supposed to buy low and sell high. People do exactly the opposite all the time. Why? There's two emotions that guide you when you invest. It's fear and it's greed. And it's just a balance, right? And so when the market is shaky, people get scared. They sell their stock market investments when it's low. They get scared, and then they miss some of the most incredible rebounds in market. Like we saw that, and I've got to grab that date, but we saw one of the greatest rebound days in market history this year, right? It just, the news can turn on a dime, right? And instantly the markets just rallied incredibly. And, there's all of these statistics here. For example, if you look at the S&P 500 over the last 20 years, so from 2003 to the end of 2022, if you look at the S&P 500 and you missed the 10 best days over that 20-year period of time, you have less than half of the return of the S&P 500. So when you end up selling when it's low, you miss those rebound days and you just defeated the whole purpose. So here's the point. Rather than trying to time the market, because timing the market's a fool's errand, right? You need to have professional money managers that have a long-term approach, no question. But you also need to have an income plan that doesn't rely on the stock market, that is independent of that is based on fixed investments, that whether the market's up or down or whatever. And you and I have slightly different approaches to how we approach that, for example. But I think that there's fixed insurance products that are the best things. At one time, bonds were the answer. I don't know that we're there yet, especially as interest rates are going to start to fall. If rates fall, it'll be fine. But it's that rise up, like we saw in 2022, that can expose that safe money to more risk than the actual stock market itself.
Yeah, I totally agree. And I know you and I agree. You mentioned that we were on Wealth Council together. And one of the last times we recorded for the national TV show with Fox Business News, you and I had a deep conversation about Social Security benefits. And we both know there's over 500 ways to file for Social Security. There's 2,200 plus rules to the 500 ways you have to file. Social Security planning, I think, is a vital part of your income planning. And I'm always blown away, Stu, when people don't come to a fiduciary advisor to optimize their Social Security benefit. I just think it's important. What do you think about that?
Well, here's what I would also say. I think that other advisors also have other motivations for how they motivate you to file. Oftentimes, what they do is they say they want you to take it as early as possible so that you're not using your investments to live on, but you're living on Social Security, and so that you're less dependent on the income requirements from your investments. Now, that may or may not make sense. What I would say is this, that we have some very advanced software. You and I both use the same exact software to do those plannings. And the situation's different. What is your health like? Listen, you and I both know, right? You can look healthy and things can happen, right? And you could feel healthy and things happen. Life is delicate. But at the end of the day, we look at statistical models that say, hey, if you're a healthy person and you have longevity in your history, then this is when it makes sense to file. Not just for you. Like, what if you're married, right? Yeah. So for example, let's look at your specific example and say, hey, you know what? Most likely, your wife is going to outlive you statistically, right? Yep. And but she has a smaller Social Security. You're the bigger earner. So if you file yours early, her death benefit when you die is your benefit that you took early, and you could be cutting her off for the next 20 or 30 years, cutting off your nose despite your face. So there's no right or wrong answer, but you have to remember this. You got to have a plan. It's got to make cohesive sense with your tax plan as well. Because you have to remember this, and I know I go on these long rants, and you're probably
good.
wishing I wasn't on your podcast. But at the end of the day, listen, when it comes to Social Security was never intended to be taxable, but it became taxable for the first time in 1983, and then more taxable in 1993. Up to 85% of your benefit can be taxed based on all the other income that adds into your provisional income. And so the point is this. The reason the Roth conversion fits in with Social Security planning is because the Roth conversion, or the Roth itself, when you take distributions, is invisible to your Social Security. It doesn't make it taxable. If you have an IRA, a 401k, a 403b, a thrift savings plan for federal workers, and you start taking distributions from that money, it can make your Social Security taxable. And Garry, I'm telling you, the one thing I'm really passionate about is this. Most financial advisors focus on your investments. They ignore Social Security because it's just this thing, right? It's just this income stream. Take it whenever. Okay. Well, when we see people, they come into our office, maybe they have $500,000, $1 million, $2 million saved for retirement, and they want to talk about that money. Well, that's great, but we also want to talk about Social Security, because the average client we see, if they live into their 80s, has between $1 million and $2.5 million of Social Security. Why aren't we talking about that?
Yeah.
See why? You know why? Because most advisors don't get paid to talk about that.
That's right.
Charge for it. It's part of our fiduciary obligation. It's part of what we do. We've all agreed, hey, we're not going to charge an additional fee to do a Social Security plan. It's included, right? But at the end of the day, if you ignore Social Security as part of the overall income plan, you're just neglecting it.
That's why I said that at my dinner last night. I said, many of you in here are probably, working with some of these big broker firms. So we call them the big house firms, and they love to talk about growth. Growth is great, but it's not a plan. Have they talked to you about long-term care? Have they talked to you about Social Security? Have they talked to you about Roth conversions? Most of them don't, Stu, and that's what makes you and I different. And we've surrounded ourselves with these wonderful teams that can help as many people. I don't care if you're in Arizona or in Tennessee. The bottom line is, and you've said the word a few times today, you have to have a plan, a written plan in place. And it has to talk about all of these things. Let's jump into healthcare, Stu. How big is it that you have to plan for healthcare? 70% of us, right? 70% are going to need some type of long-term care. Yep. That's expensive.
It's very expensive. And there are different tools out there to do that. You just have to make sure it fits you and your situation. Listen, I think the self-insured person is the best insured person, because as these insurance rules change, we have a lot of clients, they want to retire. They talk about retiring early. I want to retire in my 50s. Well, there's a period of time between which, or before, your Medicare kicks in at 65. Yeah. So you have to pay for the care or your own insurance up until 65 years old. But, some of you are relying on things like Affordable Care Act for the subsidies there. And now, here's the problem that comes when you rely on the subsidies. We have clients with millions of dollars that come in. They want to do all the tax planning, but they don't want to pay for full health care. Yeah. Right? So if we do a Roth conversion, and by the way, I think, do not be penny wise and pound foolish. Have a plan. Make sure you think it through. But we have clients, because they want to save $60 a month on their health insurance, are not willing to do a Roth conversion that will save hundreds of thousands for them potentially over their lifetime, or millions potentially. Yeah. They're willing to, because it's not just the tax you pay or that you save on the IRA and 401ks. That's right. It's the downstream effects it has on things like your Social Security, on your Medicare premiums, including things like IRMA, because when your income goes too high, you end up paying Medicare premium penalties. So, right. Things to think about. Yeah.
It's amazing to me. And you've kind of answered this already, because what you and I've talked about, how we look at all aspects of your retirement plan. But if you had something or a way you could say, what makes your financial planning process unique or different than a lot of your competitors out there, Stu.
Yeah, here's what I would say is I would say 5 years ago, we were a unicorn, no question. I think that other advisors are attempting to copy what we have from the tax planning perspective specifically, where, they can talk the talk, but they can't implement. You and I have different level of tools to be able to implement, access to CPAs, enrolled agents, all that stuff to be able to do it, to execute. Everyone can say taxes are important, but if you don't have the way to be able to actually execute, then you're just faking it till you make it. And a lot of these guys, a lot of big box firms, they don't even talk about it because they can't. They're prohibited by their firms from giving tax advice. And I would just say this: if your financial advisor doesn't have a tax plan for you, I have a friend that used to say this: sometimes you have to just shake your etch a sketch and start over because it's not the right fit, right? You shake it. Right? Sometimes to start over, you've built up this ridiculous picture that it doesn't make sense to anything. It made sense at first. You've done a good job. And we have people all the time that'll say, hey, well, look, I have a couple $1,000,000 saved. My advisor was there. Well, let me break some news to you. Okay. From 2009 until now, we've gone through a market where a blind chicken could have made money in that market, right?
Right.
If you're a solo advisor and you're like, hey, I've made, 300% since 2009. Great. You only underperformed the market by 600%. So at the end of the day, here's the thing. We're entering a new world of volatility. We think that things are going to be shaky as we move forward. The markets aren't always going to go up like they are or like they have been for the last, 20 plus years here. Yeah. So I think it's time to have a real plan and to understand your risks.
I love that. I mean, accumulation phase, preservation phase, decumulation phase. I mean, there's a lot of phases to retirement planning, and I know we focus on that. I always like to ask this question, Stu, and I think it's a unique, and I get a different answer every time from different advisors, but what is something you wish every American understood about financial planning?
That it's not about what you make, it's about what you keep, and that your cash flow matters. Because most people don't cash flow out their retirement. They have no idea. Growth is not a plan, like you said, right? Yes, listen, growth can get you out of trouble, but it can also get you in trouble when that growth stops. So I think it's important when we talk about fixed income sources to make sure you look at that. At one time, for about a year or 6 months over the last couple of years, CDs were an amazing fixed income source. But you know what the problem is? They're terrible now. Interest rates are falling on the short-term rates. We had what we called an inverted yield curve, right? Yeah. Where short-term rates were better. We haven't had to compete with a bank in 15 years as a financial advisor. Yeah, this right now. Well, listen, a year ago they were a real competitor because they had this great CDs, 5.25%, 5.5% CDs, 6% at some of them. Listen, they've gone the way of the dodo bird. They don't exist anymore. Right. But at the end of the day, the reason CDs aren't a good long-term solution in this lowering interest rate environment is something we call reinsurance or reinvestment risk. So if you buy a 1-year CD and rates drop like they've just done, you could be reinvesting at a lower rate for sure. That's why it's important to take advantage of some of the highest long-term rates we've had in 17 years. And we're there right now. Right now. We have not seen these rates since 2007. And let me just tell you, if you are an investor, a retiree, a pre-retiree, and you're not taking advantage of where we are in long-term fixed rates right now, you're missing the boat. I mean, it's
100%.
Yeah, you're listening to somebody that's trying to make commissions or fees off you in the stock market. And listen, we do both. We do both fixed instruments, insurance. We do stock market. I am open to anything. But and let's be very clear. I oversee more than $1 billion of assets under management in the stock market. So I am not anti-stock market. Do not get it twisted. But I also think it's important to have safe, fixed, guaranteed investments that if the market collapses, you're not out there wondering, how am I going to pay for my, getting nagged out for my dinner out with my spouse, right? I don't want to have to, clip coupons again in order to, if the market crashes. That's right. And I just think it's unnecessary. And the way you take advantage of that is taking advantage of the environment we're in today, which is the highest long-term interest rate we've seen since 2007. If you're not doing that for your retirement, I promise you, you're missing out.
Yeah, I think you and I both see we have clients coming in the door, and all of their money is at risk. And the older we get, we know we got to start being a little more cautious here. If we can establish that guaranteed income source, then they don't have to worry about the market, and they don't have to worry about the market volatility, like you said. And I love that. Now, here's another question.
Yeah.
Someone 5 years out from retirement.
Yep.
What are the top 2 or 3 things you want to talk to that person about?
Well, number one, their comfort level with the market.
I love it.
So a lot of it's different. There's no right or wrong portfolio. There's no universal portfolio that's right for everybody. But I'll tell you this. At the end of the day, you want to understand people's comfort level with risk, because once again, when I talk about buy low, sell high, people do the opposite. People are taking way more risk in many cases than they thought, than they understood. They thought they were conservative, and they're in an ultra aggressive individual stock portfolio that is not even, close to that. Having big brand stocks doesn't mean you're conservative just because, they're large cap stocks. Large cap stocks are, include the Magnificent Seven, which it's an amazing ride. They got smoked at the beginning of the year. Now they're doing okay again. That doesn't mean conservative because they're big. Okay. No. What we're talking about is doing a really in-depth, questionnaire to find out how you feel. Because if I put you in an aggressive portfolio, and we have a lot of clients that are very aggressive, don't get me wrong, right? But it has to match their comfort level, right? We did a pretty in-depth, and you and I, we've shared notes. I know our questionnaires like almost identical with our, risk tolerance questionnaires.
Yeah.
And at the end of the day, that psychological approach to the market is something you need to understand, because, and you could go the other way. If somebody is very aggressive and you make them too conservative, they're going to get up and leave. They're not going to be happy as a client.
Yeah.
And what I don't try to do is get clients to bend to how I feel. Okay. I get them to understand that they are in the right or the wrong portfolio for them, not for me. Listen, if you don't like my suggestion for risk tolerance, you're not calling my wife ugly because you don't like the portfolio. You're just saying, hey, I'm more aggressive. Well, sometimes it's right, sometimes it's wrong. It's those people that take too much risk that end up getting smoked in the market, like we saw this year.
Yeah, absolutely. And it's like, well, I guess I should ask the question. I think I know the answer to this. A lot of people still love the old theory of 60-40, right? 60% in equities or stocks, 40% in bonds, take out 4% a year. It just doesn't exist anymore, Stu. And you got to educate people on that.
Yeah, the 60-40 got just absolutely disproven and smoked. I mean, like I've used that word smoked a bit, and I'm probably killing that piece here.
I like it.
But 2021, 2022, when we saw the crazy spike of interest rates, showed you how truly exposed bonds can be to market volatility. And so it doesn't mean that they're safe. Listen, I'm going to say a word that a lot of people don't like talking about when it comes to financial planning. It's the word annuity, right? And I don't love annuities. I don't hate annuities. I don't care. They're just a product. They're a tool.
They're a vehicle.
They're a tool to get you to where you're trying to be. They're good for some people, bad for others, depending on what you're trying to do. But I think people have to consider, in this high interest rate environment, looking at those kind of tools to have guaranteed protection of your principal, guaranteed protection of your income in retirement. And I think it needs to be part of people's plans, especially now that we're in a high rate environment. Because, listen, a lot of the negativity comes from, there's a big registered investment advisor out there that has this ad says, rather go to hell than sell you an annuity. Well, at the end of the day, they're marketing to people. We saw one of the biggest years ever for annuity, and people market to things that are popular as the counter because they know people are considering, right? So if I put an ad out there, if you buy a mutual fund, you're going to lose all your money and you're going to have to go back to work at 7. Well, that would get some response on a Google ad or a Facebook ad or a video ad, right? Doesn't mean it's right. Doesn't mean it's wrong. Who knows until, the future uncovers. It's just an ad, okay? And people say crazy stuff in ads.
Yeah.
And I am agnostic to product. I am agnostic to tools. If a tool makes sense, then we use it. If it
Yes.
doesn't, then we don't. It's
That's
that
right.
simple.
It's that simple. And something else, this came up for me again last night when I was talking about annuities and how we use them here at our location, about the impairment riders now that are attached to these. And like if you pick the right one, it's not long-term care insurance, but it will help you for maybe some in-home care. If you get sick, where they can double your income. So the properly structured fixed index annuities, wow, have they changed over the last 10 years too?
Just more efficient. They're
They're more
they're just
efficient.
they're like, I think people look at annuities and they think about these variable annuities that have 3-4%
Yeah,
in fees.
yeah,
Listen, I mean, it's a bit of financial Darwinism here where things have just evolved. They've gotten better. Things have, there's some crappy product out there, no doubt
sure,
about it. Like
sure.
there's some stuff out there I wouldn't touch with a 10-foot pole. I would also, with products and companies, I would not touch. I would, if it's not an an A minus or better company, I wouldn't touch it.
Right.
That's why I stick to, really high quality companies. You want to make sure that they can survive any volatility out there as well.
Yep.
You can't use it as an inducement to purchase, but most annuities are backed by a guarantee association in each
Right.
state. And so, I don't really talk about that much with the client, but on a podcast, I'm comfortable having the conversation to say, hey,
Perfect.
you know what, there's some protections in place there that don't exist in the market, that make me very comfortable using them for a certain portion of
Sure.
people's retirement assets. No question.
Right. Totally agree with you. So I want to talk about you for a few minutes. I want to focus on you. So what is your why? Why do you get up every day and work as hard as you do? I know there's days you work 7 days a week, but what is your actual why to what you're doing right now?
Well, here's what I'll say. First of all, I love it, and I know I don't want to be preachy at all, but I think when you're a good person, you do good things, and you're helping people, that good things happen to you.
That's right.
I think that our company's growth from a single office in Surprise, Arizona, to now 12 offices nationwide. I think it's for a reason. I think our message has resonated where taxes matter. But my why is this: I love it. I have a very, very simple rule, okay, that I'll never violate no matter what. I just told a client right before we started taping this. I had a client in here, and I was very clear. I have one rule I never will violate. I don't do business with people I don't like. Okay.
Yeah.
And so, if you're understanding that, then all of my clients, they can reach me by my cell phone. They 7 days a week. I don't care, because I'm hanging out with people I enjoy.
Yeah.
I'm not hanging out with people like, oh my gosh, I've got to go to work today. It's going to be terrible.
Right.
I'm hanging out with people I enjoy. It's like when you ask me to do this podcast. Listen, if you think I have free time to, for every request, the answer is no. I get podcast requests every day.
Yeah.
You're a friend of mine who I truly enjoy hanging out with. You're someone who I enjoy, having these conversations. You've helped my business. I know you give me credit, but you've helped me as much as I've helped you. And at the end of the day, my why is this: I enjoy the people I'm around, and I love seeing my friends succeed, no matter
I
what.
love it.
And I consider my clients that same thing. And
Yeah.
and maybe it's a little much, maybe it's a little too much, because we don't really lose clients. I mean, every once in a while, people will move away. We look
Right.
at in Arizona, we have this is what we call a snowbird state, where people move back. They move here, they come from the Midwest, they come here because they avoid the winters. And then, sometimes when they get into their ultra old elder years, they move back and they're like, hey, I really need to deal with someone locally. And, not always, but it breaks my heart when I lose a client. But
Yeah.
but it's, because it's a real relationship. And I would just say this: I would say this to the audience: analyze your relationship. Are you doing business with someone who you don't enjoy? If that's true, okay, if that's true, Garry, that these people are doing business with someone they don't like, then here's the problem: you're going to be way more hesitant to have those meetings. Listen, 3 times a year, you want to have a meeting with your advisor. We have 2 mandatory meetings, but 3, I think, are important. If it's someone you enjoy, you're going to look forward to that. You're going to want to,
Yeah.
man, I listen, I got to hang out with Garry. I got to hang out with, Stewart. I got to someone I enjoy.
Right.
If your financial advisor doesn't give you the dignity and respect to honor how you feel, and they ignore and they just shoot aside your feelings, you are doing business with the wrong person, period.
That's right.
No question.
Right. I love
So,
you. Just
so
made
my
me
why
think.
is yeah, my why is I hang out with people I enjoy. I love doing what I'm
Well, you
doing.
love what you do. I mean, you can hear it, you can see it. You're passionate. You just reminded me. Tim and Bobby they were doing a review this morning with some clients that have been part of our family now for 10+ years. I didn't even know they were coming in today. Tim and Bobby was taking care of everything. I was doing a lot of other stuff, but it was funny. I was back in my office working, and they would not leave until she came and gave me a hug. Right?
That's
She's
awesome.
like, I don't come here without giving Garry a hug. So I mean, it's family. And I say that all the time. We want you to be part of our family, the Guardian family. I love your passion. And I'm the same way, Stu. I love what I do. And I mean, buddy, I was up at 4:30 this morning, ready to go. And that's just who I am. I love it. It just
Yeah.
makes it fun for us. So,
Awesome.
what's the best piece of financial advice you've ever gotten, and from whom?
Yeah, I think when it comes to financial advice, it's interesting. I think people are so worried about impressing people around them that they lose sight of the bigger picture, right? I think keeping up with the Joneses is the surest way to make sure that you don't have a successful retirement.
Yeah,
And
exactly.
and we see people all the time that are worried about, like there's different communities. I have a client that is an Indian client, and he's from the Sikh community, Sikh. And what's interesting about them is it's a very successful community, but they're very competitive amongst each other, not amongst anybody else. But and the problem is they always have to keep up with the Joneses in this kind of microcosm, and they all talk about it the same. Sometimes you have to break that chain of who cares? Like, what are you talking about? Like, does whether you're driving a Range Rover or a Ford Explorer really matter? Is it really going to change the outcome of your life because somebody sees you driving in this really expensive car, or maybe too expensive for your current lifestyle? And at the end of the day, do what you can do. We we have to keep our eyes on the ball. And I have some really good friends of ours, a guy named Ron Williams, who his two sons play in the NBA. His eldest son, Jalen Williams, would just played for OKC. They just won the NBA Finals.
Yeah.
And he's a great guy, a great man that cares about his family. This unbelievable human being. But he has a saying. He says, "Keep the main thing the main thing." Right?
Oh,
It's just very very simple,
I love it.
but on the point. Like, don't worry about everything else. Don't
Right.
ignore the noise in your brain. Ignore what everybody else is saying. Don't worry about being the guy that has to be flashy or has impress yourself, impress
That's
your
right.
family, be a good human being, and impress the people that you care about. At the end of the day, those other people are not going to matter. So why try pressing them now?
I love it.
Worry about the people that matter the most to you.
Keep what's important right in front of you, man, and focus on that. I love that. So this is always a fun question to ask to get to the end of our segment here. But if you're passionate about what you do, that's obvious, and I love it. But if you were not doing this, Stu, what would Stewart Willis be doing?
Well, it's an incredible. Yeah. Oh man. I can't even imagine this. Honestly, I think what I would do is, because I do look at, hey, what does life look like later? And you're blowing my mind with that question right now that I wasn't prepared for. I would be in some version of business, trying to grow something with a purpose. I would definitely be involved in charities like I am now. We're very involved with Helping Hands for single moms, which is a very important charity to me here in the Phoenix area. I do that with Eddie Johnson from the Phoenix Suns.
Nice.
I'm also taking some really neat action. Reggie Jackson, Mr. October,
Yeah.
came and we filmed it. He filmed on our TV show, and we're going to start doing some nice work with the Mr. October Foundation. it's really makes education an important thing. That listen, I came from a community where, or from a, a place in my life where education wasn't a big thing. No one even mentioned college to me. And you know what's funny is that STEM education, math, science, the basics, right? Not the nonsense that you're getting in schools today, but the basics, right? Math, English, science. Those are the things that matter. And I think that making sure that people that, despite how much we're spending on education, our kids are leaving high school, completely uneducated.
Right.
And, I was one of those people that was left behind. Thank goodness I found my way to, despite my high school experience, being able to, make my way to Berkeley, building up a multi-billion-dollar company. And so I'm excited. In fact, tomorrow, I don't know if I said this already, I'm going to my 34th class reunion, and
We talked about that in Mexico. Yeah.
a lot of them had no idea that I ended up going to Berkeley, which at the time was the most, difficult public university in the world to go to. But to just put some icing on the cake, I'm flying there tomorrow on our private jet, and I'm going to make sure they realize that. Not because I'm like, ooh, look at me, but it's like, you know what, guys, have faith in more people. Like, don't think that I'm going to lower myself to your expectations. And it's the same thing in finance, right? Don't worry about what everybody expects. Hey, listen, I do as I say, not as I do. The private jet thing is just hey, you know what? I'm good. I don't need to listen to your advice. And our teachers are going to be there, people that were terrible teachers for me in high school. And at the end of the day, am I bitter? A little bit. I'll be fine after tomorrow.
Still, I love this story because I never will forget my 11th grade year in high school. My guidance counselor, and I would say her name, but she's passed on, so I'm not going to say that. But at the time, I grew up with nothing, Stu. I mean, we grew up very, very, very poor. I don't care to say that. And I worked. I was a worker, and I was a cook at a local restaurant, which became a passion of mine to cook. I love it. But she goes, Gary, tell me what your job is now. I said, I'm a cook at this particular restaurant. She goes, honey, you just need to stick with that because you're never going to be anything. Oh, and I'll tell you what, she lit a fire in me. Not that I knew I was going to be doing what I do now. I wanted to be a cook. I love it. But my goal was to be a chef one day. But I fell into this industry, and I went back, and I think this was probably my 15th class reunion from high school. And we actually had it at the high school, and she was still there. Oh, I walked by her, and I was just chest out.
Yeah. Look at me now. Don't listen. I'm being a bit petty myself with the whole jet thing tomorrow, but I don't care. I'm going to make it there's some teachers that are going that were so worried about a certain group of kids. It's the same thing in finance, man. Like
It is.
just, we all have our issues. I came from nothing as well, like I said. And at the end of the day, what matters most to me is that I'm, got a beautiful family, a healthy family that's all good people, and that's who I surround myself with.
That's right, brother. So I want to tell everybody out there. So again, Stewart has 5 locations in the Arizona area: Las Vegas, Oregon, Nevada, Portland, and in Vancouver, Washington right now. If you're in those areas and you're like, wow, I'm watching this show and maybe I need to get a second opinion. Maybe I need to get a second set of eyes on my portfolio. Or maybe you're someone that's just starting on the journey. You're 59, 55, 60 years old, and you have no plans on how to retire and how to properly retire. I'm going to encourage you guys to reach out. I'm going to give you a couple of things here. First of all, is a website, apsitaxes.com. apsitaxes.com. You can email them, at info@apsitaxes.com, info@apsitaxes.com. Phone number 602-449-0146. I'll repeat that, 602-449-0146. You can also go out on all the social media outlets, Asset Preservation, Wealth, and Tax. I actually went onto your website earlier, Stu. It's phenomenal. I went on your Facebook page. It's fantastic. Great job. And what I love about your website is like mine. You can go in there and see all your TV shows, listen to some radio shows. I mean, everybody can really find out who we are by just going to our websites. Don't you agree?
Yeah, and it's just once again, if you don't like me here, you're not going to like me in person. Don't bother calling. But if you're not happy with where you're at, listen. A good friend of mine always says you can't get a second opinion from the person who gave you the first. So
Right.
if you're looking for a second opinion, we'd be glad to give it to you.
I love it. If you're starting the Tennessee Valley, Chattanooga, Knoxville area, North Georgia, I'm going to give you my information really quick. GIAplantoday.com, GIAplantoday.com, 423-710-9199. As you can see, Stu and I think a lot alike about how we do these planning. And Stuart mentioned it earlier. We are surrounded by peers that do what we do. We get to learn from those guys every single day, and gals. There's some wonderful gals out there in this industry as well. And it's just a lot of fun being networked with such amazing people who love their family, who roll up their sleeves, they dig in the trenches with you, they get into the trenches with you, and just make sure that your retirement is successful. And that's our bottom line. Stuart, any final closing words here, bud?
Yeah, I would just say once again, if you don't have a financial plan that includes a tax plan and an income plan, you don't have a plan. And
Yeah,
growth isn't a plan. So make sure you have a plan and do business with somebody you enjoy, or you're wasting your life hanging out with people you don't.
I love it. So, hey, buddy, thank you so much for being on the show.
Well, thanks for having me. Always love chatting with you.
I love it, brother. Hey, folks, stay tuned. Next week, we'll have another wonderful advisor of Money Across America. My name's Garry Thurman. Have a great day.